Welcome everybody to the Chinchilla Pickin' Podcast. It is October the 8th, 2023. It is 3:53 p.m. My name is David Underwood, and I'm joined by Brandon Beaver. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. Brandon, how are you?
I'm doing good. How about you?
I am doing well because I speak the King's English, okay?
Okay.
I don't say I'm
That's
doing
good.
good. I'm
I'm just
joking. I'm joking.
I guess I'm just the uncultured swine over here.
Americans. No,
Woo!
it's I know some people in the rest of the country are still seeing warmer temperatures, but here in Cincinnati, Ohio, we are no longer seeing warmer temperatures. Um, temperatures dropped pretty drastically over the weekend, so falls came right in, and I think pumpkin spice sales are going to be up just because of the fall weather, right? Right? Am I
Right.
wrong? I
Oh,
don't drink pumpkin spice
definitely.
stuff.
I'm going to contribute.
Are you?
Oh,
Do you drink pumpkin spice?
oh, absolutely.
Yeah, you do like the 4 sugars and 5 extra shots of cream person, aren't you?
At Starbucks. At home, I'm not.
So at home, I am straight black coffee. At Starbucks, I am an iced Americano, which is just espresso and water. And I do a little bit of cream, light cream. That's it. No sugar, no nothing, just light cream.
Straight black coffee at home for me with just sugar.
You and sugar, you got to quit the sugar, man. It's
Well,
not
I don't.
healthy
So
for
I
you, dude.
switched from I used to do tablespoons of it, and now I just do regular spoons,
Gotcha.
and I only do two now. So
Yeah, sorry. And I'm going to be on this health kick because I got back in the gym. I took 2 months off. I'm back in it. I gained 15 pounds just taking 2 months off of going to the gym because I think that when I'm actively going to the gym 3 to 5 days a week, probably I was doing 5 days a week there, right? I'm actually more conscious of what I'm eating as well, and and what I'm putting in my body. You know, I have to remind myself my body is not a garbage disposal. I'm not just throwing stuff in. You know, I got to be mindful about what I'm eating, and so I don't know. It gets me on this health kick, and then when I hear people putting in extra sugars in the coffee of friends that I care about, I'm like, dude, you can't do that. It's not healthy. I don't
well,
know.
I
I'm not,
also
I'm not
smoke
trying to
about
be rude or anything. I don't know.
I also smoke about 4 or 5 cigarettes on this podcast too. So
Yeah, and that you got to stop that too, man. Come on, come on.
yeah,
Let's get real here for a moment. Let's get real.
all right.
All right, rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You hear the live discussion, the back and forth, the bicker, and the banter here on the show. We are going to start with the bear and the bonds, Brandon Beaver, but I do want to make a comment before he starts that I already disagree with what he's going to go into, and I have a harsh question for him once he digs into it here. So, Brandon, go ahead. Let's start
So
this argument off.
I want to say this real quick. Let's go back to my comment a couple years ago, very first week of the show, probably when I said bonds are dead. And if you've
Yes, I
gotten
keep bringing that up. I'm sorry.
if you've gotten to, and they were, but if you've gotten to know my trading style in the stock market, my investing style, is that when everybody else is piling into something, that's when it's dead to me because it's going to die. So I really should have said that bonds are going to die because investing in bonds 2 years ago, well, it turns out it really wasn't a good investment. And I wound up being correct about that.
You did end up being correct, yes.
Bonds right now are certainly dead to the mainstream media. The question is everything kind of priced into the bonds now, into the treasuries and all of that stuff, all the craziness? Probably not yet. If you were to go ahead and buy a treasury or corporate bond or something, I think Apple's corporate bonds, by the way, even Apple's down 40% in the bond market right now. But if you were to go ahead and do it right now and hold it to maturity, that would be fine. That's good. I actually I'm not against that at all. That is something that could probably serve you pretty well in your portfolio over the years to come, especially if we're heading for harder times like I think we are. Just make sure you do it with money that you're not going to need, because if we do head for hard times and we go into a recession and you have to sell your stocks or your bonds at that point in time, It's not going to be good. You're going to take your losses. It's not going to be a fun time. With that being said, I'm still in the hard landing mark, right? I'm still in the hard landing group. Very unpopular group to be in right now.
Before you get into hard landing, I want to make a comment on, that money that you don't need should be investing with. When you're saving for retirement, or you're investing for retirement, or you're investing for something else, even, I mean, you don't even have to invest for retirement. You could invest to try to grow money so you can start business. I don't know. There's lots of reasons to invest, but when you're investing, that shouldn't be money that you need to live off of at all, ever, day to day. This should be, I mean, you should have, this is why I recommend, like, to people who are living paycheck to paycheck, they're like, well, how do I get started? I'm like, well, if you can afford just an extra $10 out of your paycheck, go into your stock account, start there, maybe get a second job, even, is what I've recommended, or try to get a different skill so you could get a higher paying job. And I work with them and I try to coach and mentor them to get to that point. But yes, it should never be money you need to live off of when you're investing.
Right. Exactly. Or if you have any expenses coming up, you should probably keep, enough money to cover any maintenance, repairs, or anything like that that you need to have done on your house or on your car or whatever. You never know what's going to come. So, have an emergency fund there to kind of buffer you between yourself and your stocks. Have that right in the middle. Always beneficial.
Yep. All right, now go ahead. Let's go into hard landing.
With that being said, the jobs report came back. The economy added 336,000 jobs in September. The unemployment rate remained at 3.8%. And Wall Street and economists had expected 170,000 jobs in September. So pretty hot report there on the jobs, and definitely puts me in a unpopular group of people that still think that we're going to be going into a hard landing. But I want to point your attention to what's going on in the Treasury yields, because this is something that the Federal Reserve, with quantitative tightening and with hiking the interest rates, this is something that the Federal Reserve seems to be breaking as far as this market goes. Since the start of August, the yield on the benchmark Treasury 10-year note has risen by over 20%. It briefly hit 4.9%. I think that was on Thursday. And then by the end of Friday, it settled back down to 4.8%. This is the highest since 2007. And the rise in the Treasury yields in recent weeks, I think it seems to suggest that people think that rates will stay higher for much longer, which that suggests maybe a soft landing. But at the same time, still not good times ahead for the stock market. So say, for example, if you're correct, if we go into a soft landing here, this could be a new regime of higher interest rates for the next 3 to 5 years. And that would be still like a slow burn, a slow pain that I think would make the stock market very treacherous for the next 3 to 5 years if that happens. Now, with that being said, if you've got a longer term time horizon, and if that case does come true, you could actually you could turn that into your benefit, because given the way that the stock market would react, just imagine having 3 to 5 years to buy stocks at lows if you've got a 20-year time horizon. And generally speaking, when the comeback happens in the stock market, it happens to be very swift and strong comebacks when bulls go back on their parades, then you can make a lot of money very quickly. Go ahead, Dave.
Bulls on parade. Wow, you're quoting
Yeah.
90s songs here. So yeah, you threw me off of that Bulls on parade. I had an actual point I was gonna make about interest rates being higher and the soft landing and all that, and you threw me off. Yeah, I completely lost my point I was gonna make. But interest rates are going to be higher, man. And I'm looking at a soft landing, but it's your timelines is where I have a question. And this is the question I have for everybody that says we're going to have a hard landing. You guys have been saying a hard landing for the past year, maybe year and a half. And I keep asking, well, when? When you can't just say it forever for intuity, because a broken watch is right twice a
Okay.
day. You're eventually going to be correct, and then you're going to say, "Look, I was correct." And I'm like, "Well, you weren't correct. You've been saying it for years. Yeah, eventually
Yeah.
it's going to happen." My point is, like, you can't tell me when. You can't tell me what to look
So
for.
because that's a pointless question that is not answerable. So here's where we're right. You could easily diagnose what the cause of the next recession is going to be. And you could say the next 2 to 3 years out or something like that. But this is it's a process. And nobody knows when it's exactly going to happen, because I'm not Miss Cleo. I can't look at I can't read your palms, So I can tell you that where we're at in the market cycle, I cannot tell you exactly how long this period in this part of the market cycle is going to last. Does that make sense?
It does make sense. And here's where the thing is, and here's my difference from me to you guys, is that I do have that crystal ball and I can tell you when it's going to happen. It's going to happen when everybody is forced to pay back their student loans. That's going to have the first leg of it. The next leg is when they can't pay back their credit cards, and then those start going down and under. That's going to have the next domino. That is my timeline, and those are what I've been consistent all year long, saying that is what I'm looking for. I'm looking for the credit cards to fail because people can't make payments. One of the reasons that could happen and could start is because of the whole student loan payments. I've said this time and time again. I've given people what to look for, and not just said, look, it's on the horizon some point. I said,
Okay,
no,
well,
look for these signs, look for these symbols, look for these.
so yeah, those signs and symbols, which is what I'm doing, the exact same thing. And you're not even giving a timeline yourself there. You're just telling the causes of it, of what could happen. So when is that going to be? Like, you didn't say a month. You didn't say like December 25th,
Well,
Christmas or whatever.
that's December 20th is when they're going to make people start paying back student loans. So then it's going to come January, maybe February, they're going to start missing credit card payments. You're looking at March is that the credit cards start going ahead and collapsing.
Well, the delinquencies are already rising. I don't think we're having a collapse yet, but the delinquencies are already going up. Retailers are already reporting that.
Holiday season is going to be it's going to be medium. I don't think it's going to be low, because like I said, they don't have to start paying them back just yet, not until the end of the holiday season. So they're going to be able to buy their Christmas presents or holiday presents, sorry, in the November, early December, before they have to start making those payments. So then it's not going to hit till January and February is what I'm saying. And so that's when you're going to start to see the possibility. Now, I say the possibility because our administration currently has still, every single time we've gotten close to this point, pushed it out.
Yeah.
And this is why I keep saying, like, it may not happen, because they might push it out again.
Okay. I gotcha. So you do have kind of a little bit of a time frame there. I think it's dangerous to call that time frame because it's not something that's easily, pinpointed. But what we can look at right now is what the Federal Reserve is doing is causing volatility in interest rates and increasing the likelihood of financial breakdowns. Now, if we go into that period, you could still have, if 3 to 5 years, if we go into that, where interest rates still have to remain high, the economy remains, kind of hot, and we don't have a breakdown in unemployment numbers, we don't have a financial crisis, anything like that, businesses can still operate in that environment as long as interest rates remain predictable. The problem becomes is when interest rates are volatile. And we have that right now. So hopefully we don't have a sustained volatility in interest rates, but because that does increase the likelihood of financial breakdowns. And yields appear, if you look at the past, like just a couple weeks, yields have went crazy, and they appear to be rising because of investors. They want extra compensation for risks associated with locking up their money for longer periods of time. And this involves American political turmoil. We just saw the House of Representatives, their speakership was vacated, inflation uncertainty, Fed uncertainty. And now, with the tragedy that just happened in Israel yesterday, we're adding in more geopolitical concerns. So I do think that volatility in the interest rates in the treasury market and bonds, I think this is going to continue. Go ahead, Dave.
As of right now, I'm not concerned about the volatility. The unfortunate incidences currently in Israel, as far as a investing in stock market effect, just because it's not affecting any oil supplies or refining in that area, and that would be the number one concern from a investment financial aspect only. It is unfortunate what's happening in the geopolitical events. You do have to monitor to see if your investments are affected by it, such as China and Taiwan Semiconductor. But secondly, I see an opportunity for anyone to utilize cryptocurrencies as a way to give out loans without having to follow the interest rate given by the Fed. I see an opportunity for a business. I know we have some listeners that are very affluent. This is an opportunity. Take it. You could use cryptocurrency. You could give out home loans, and you could say 1.5% instead of 7%, and you can make a ton of money because everybody's going to come to you, but you have to use crypto.
You would need crypto to be stable, though, and that's even more volatile than interest rates right now.
I mean, once you give out the money, they can transfer it to cash, and that's on them. But yeah, so it's a business opportunity. I thought about it, and I'm taking advantage of the system right now because the system is high interest rates, and if you're doing these loans between me and Joe, the plumber down the street, or sorry, wrong, horrible political analogy. Sorry, me and Harry the carpenter. There you go, me and Harry the carpenter. And I'm giving him that loan via cryptocurrency and for 1.5% versus 7%. It's a better opportunity, I think.
Dave, we both knew an actual carpenter whose last name was Carpenter that worked at one of our previous employees. I don't know if you remember that or not.
No, I didn't. Okay, yeah, I do. Yes. All right, yeah. But you see my point. There's opportunities in these harsh times to go ahead and start be innovative and be creative with financing. It's hard to break into the banking system, even if you're trying to do a credit union or a loan and savings or what have you. It's very hard, very tough, a lot of regulation, a lot of rules you have to play by. But that's where cryptocurrency allows us to kind of move around those rules legally. And so this is if anyone's listening and you want a great idea for a company, find a way to do this. I haven't put enough thought into it, so there might be a way.
You have to find a way to keep it stable, because you're going to wind up having the same problems that the banks are having right now as far as the volatility of interest rates go if you're not careful.
Oh, well. Continue for your hard landing theory here.
Okay. So here's the two-edged sword for me, where I don't think anything really ends very well for the stock market over the short period of time. So consumption has been strong, and this is despite the Fed's aggressive rate increases, right? So that's been good. That's another reason why people are saying that it's a very unpopular position right now to be in if you're saying hard landing. But if it's because the neutral rate is higher and people are getting more interest income, which I don't think that's the case, but if it is, then they're going to keep rates higher for longer. And they're going to justify the recent run up in yields with that. So higher for longer, still not good for the stock market. But if it's because the traditional lags in the monetary policy just simply haven't kicked in yet, that means we probably still have another recession to come. And it's just a matter of time before it happens. So two-edged sword there, pick your poison. And I don't think the stock market's gonna price that in just yet. I think that I think that Friday's jobs report coming in hot just put us in a camp, where everybody is now saying this time it's different. And then this time it's different rallies can be very, very, very strong, but they're very dangerous to buy into. Go ahead.
All right. You brought it up, the jobs report. This is the second time you've mentioned it. This is a headline I was going to read to you later on, right?
Okay.
CNBC published Friday, October 6, 10:12 a.m. You can look it up. They do this every month. Here's where the jobs are for September, but they do it every month on the jobs report day. So you can go in there, you can read it. This is a very interesting article. It's written by Jesse Pound at CNBC. But in this, I want to highlight a couple things here. And this is a quote from Furman on CNBC. He says, we're creating jobs at a clip of nearly 300,000 a month over the last 3 months. This is way above what you need for the normal replacement rate. but we have seen a higher participation rate. So maybe what we're seeing here is labor supply, not labor demand. So what he's basically talking about is that you're seeing more people come back to working jobs. People are getting sick of DoorDashes. A lot of Uber drivers have been called out on social media for this or that. DoorDash drivers are being robbed. A lot of people are tired of those jobs, and here's another one of my points: is one of the highest benefactors of these good job reports the last few months has been leisure, and hospitality jobs, which is your typical restaurant servers, you know, and or retail workers, and so people are willing to come back to these jobs that they left during COVID, and they said, I don't want to work those jobs. You remember how restaurants couldn't get fully staffed to save their life? Well, now they are. Now
Right.
people are coming back to these jobs,
And
and
that's
so what his point is, it's labor supply. The labor participant rate is much higher. More people are participating in labor pool, and so therefore it's just people coming back to the jobs is what it is.
I wish I had memorized all of our episodes and their dates, because I think it was about a year ago, Dave, that me and you both predicted that this was going to happen.
It was actually earlier this year, and I was talking about how we were going down in the total amount of jobs available. It was like 12 million, then 11 million, then 10 million. Then 1 month we dropped down to 9 million, and total jobs available is what I'm talking about. It did jump back up to 10 million, and we've been going back and forth between 9 and 10 million ever since. It's been kind of stabilized. It didn't continue fall like I was worried it was going to do, and we were just going to run out of jobs. But it did stabilize, and that's one of the reasons why I switched from hard landing Dave to soft landing Dave, because we that statistic stabilized from month to month, and jobs is very key. People were willing to take these jobs that they weren't willing to take 2 years ago.
Yeah, and so they're not being counted as unemployed, because I don't think the gig economy was counted at the time.
Exactly, which is why the unemployment job numbers remains about steady. And so that's the explanation for the jobs numbers. That's my explanation for that. That actually gives more credence to a soft landing, because you have more people working. You have more people earning a paycheck. You have more people paying taxes on the paycheck versus, they're working a gig economy and they're not getting taxes taken out. So now the government's getting more money coming in. This is why the Fed raised they hired 90,000 more workers last month. A lot of that had to do with federal school systems and so forth. But these are all things you have to take in consideration. You have to look at the whole big picture to understand what's really going on here.
Let me jump into something else here real quick, and regarding to treasuries, that I think you and I both agree on. This is an actual threat. So if you take into account the uncertainties of quantitative tightening, which is what the Federal Reserve is back to doing again, and shedding their shares of treasuries and bonds back out onto the market right now, which is part of the reason why bond yields are going up and bond prices are taking a nosedive. The Treasury Department caught everybody off guard by announcing that it would borrow roughly $1 trillion in just the third quarter of this year. So with the Federal Reserve tightening and loosening, or tightening up its balance sheet and then putting all these treasuries back out onto the market, then the Treasury comes out and then says, oh, by the way, we're going to have 1 trillion more to hit the market, because that's essentially what it is. When they're borrowing, they're selling these off as treasuries. There's, and investors are buying into these treasuries, but $1 trillion in just the third quarter. And this increase in new debt could pressure bond prices for years to come. So this could be something, when I talked about the volatility of treasuries and bonds and interest rates and things like that being a danger to the financial system, when the federal government is continuing to spend the way that it's spending, and the money printing is going at all-time highs, it's not something that helps. This is something that's definitely going to add to the volatility. And roughly so let me just put this in perspective. $25 trillion of treasuries. This underpins the global banking system and the reserve status of the US dollar. So if we ever get into a situation, I'm not saying that this is going to happen, but it's looking increasingly like it could be a threat in the future, where a treasury auction fails, or the treasury just has like a huge sell-off. It's not good. It's not good for the global banking system. It's not good for the United States economy. We've got to get the spending under control. And then
From an investment and financial aspect alone, just from that aspect alone, yes, quantitative tightening was great for the finance and investment aspect in the long term, but it takes a hit in the short term. And then this is kind of going contrary to quantitative tightening. You're doing the exact opposite at the exact same time.
Yeah.
So it really does no good. And it's at a time when other countries are selling foreign bonds, which we'll get into as part of what I'm going to get into later on. But some other countries are selling their foreign bonds.
Japan is back at it again. They're back at selling U.S. treasuries, and that was one of the things that contributed to rate hike, or not rate hikes, but rate volatility. Just a year ago, we covered it on this show here.
But I mean, it's saying if you have a U.S. Treasury though, a 10-year at over 10%, I mean, who wouldn't buy that and hold it? You're guaranteed 10% a year for 10 years.
And that's incredible. And that's this is why I'm saying that if you buy a 10-year treasury note, even right now, what is it? I think it's a
4.7, 4.8, somewhere in there.
Or something like that. That's still not bad. But the problem becomes is if you lose your job due to a recession and then you have to sell it. So, at all-time lows, there's just basically, if you're going to do it, make sure you're going to hold it to maturity, or that you can hold it to maturity. If the opportunity comes to trade it at a better price than what you got it for, then great. But make sure that whatever money you put into a treasury or into a bond, say if it's 10 years, that you can afford to hold that in there for 10 years with absolute no problem, even if you lose your job.
Yep.
Okay. So, and then you might be wondering, if you're kind of new to the stock market, you might be wondering, what does this have to do with Microsoft? What does this have to do with Apple? So on. Well, stocks are valued in part based on how attractive their potential returns are relative to those on the treasuries. So more bonds at higher yields means lower stock prices.
Yeah, because all the big banks and everybody else can be buying bonds instead of stocks.
Right. And it's considered to be less risky.
And where do they get the money to buy the bonds? They got to sell their stocks in order to do it. Right. So it makes the stock market drop. Yes. Right.
Now, Steve Russell, co-manager of Ruffer & Co., he said in a note to investors that markets still believe in a soft landing. Inflation dissipates without a recession. Yet we stick to our increasingly unfashionable belief that record monetary tightening and its full impact have yet to be felt. Locked-in low rates and faster nominal GDP growth have likely deferred, but not defanged the biting point. Central banks could soon find themselves in a much trickier situation as inflation base effects and now rising energy prices switch from being disinflationary tailwinds to inflationary ones. I don't know when they were ever disinflationary in this round of the market, but anyways, he continues. If economies continue to slow, this could raise recession risk by forcing central banks to stay inappropriately tight. But if economies reaccelerate, especially in the United States, it raises the specter of a second inflationary wave with further rate hikes. So he's kind of in that camp, just to break it down a little bit more, that it's kind of a two-edged sword, either longer rate hikes or spending a longer time with higher rates and more rate hikes possibly, or recession.
I mean, I think we're going to have both eventually. I mean, I'm not going to say it's a hard landing, recession, or none of that. No, I'm going to say, if these things happen, we will, but they're going to continue to keep rates high.
Yeah.
They're not going to lower rates. No.
So I want to say this. I am in the hard landing camp, but I'm not beyond, I'm not beyond the fact that I could be wrong. I would love to be wrong. I would love to be wrong about the potential 3 to 5 years of, tough stock market times. even though I think if you have a 20-year time horizon, that could be beneficial for many people. They're going to get caught up in that volatility and they might sell at the wrong time. But
Maybe we'll see. We will see, man. All I'm saying is right now, take advantage of the ups and downs. And if you're a day trader or a swing trader, it's a great opportunity right now to make some quick money and good money. But it's also a good time to get into certain investments. Like I'm still slowly buying Tesla every week. I put another couple percentages of what I've allocated to buy, and I buy more. Continuing to do that.
raise your hands if you wish you could have bought in 2008, 2000.
I did buy in 2008,
Yeah.
man. I did buy.
I can't see anybody on this podcast, obviously, other than Dave. But man, I wish I wasn't in stocks yet. I got into it right after the recession, but I wish I would have gotten into them a lot lower than what I did. That would have been amazing. So, stock.
Well, I mean, there's always opportunities to get in on ground floor companies. You just got to have a belief in what that ground floor company is going to do. And you got to have the money to sit in there for a long time because it might be 5 years before that stock price actually moves, because they have to build their business up. They have to produce sales. They got to grow. It takes time. So if you're in a company that's brand new and building a business and you buy in, and right now it's still sitting at $2-3 a share, but you believe in it, you have fundamental proof that this is growing consistently year over year. I mean, then just wait, just sit back, relax, man. You put your investment in, it'll pay off.
Yeah. And look at the company's management that you're buying into. If they're good managers, then you're going to be a lot better off. I want to give a couple of examples here. For example, CEO by the name of Greg Brown. And I can't believe I'm going to mention this company stock because I really thought they'd be out of business by now. But he is the CEO of Motorola. And when Brown took over 15 years ago, Motorola Solutions, the market cap on this was just below $8 billion. Now it sports a $46 billion market cap. Motorola Solution stocks returned 668%, while the S&P 500 index is up 338% over that time. And their addressable market, he says, is $60 billion. They're doing just under $10 billion this year. He says there's still plenty of upside to go. So what happened here when he took over? Motorola, of course, was a cell phone business. They also were a cable television equipment business, a wireless network infrastructure business, and a business that produced mobile computers, tablets, and barcode scanners. He took this over and he said, hey, look, all this stuff is dying. We need to get out of it. And he sold all of it. And he only retained the private networks, equipment, and services business. And they operate mostly for police, fire, and the military. And the result of this is that this has become a cash generating cow, which is incredible turnaround for Motorola, which looked like it was going to be, one of the victims of Apple for sure. So that's all I've got on Motorola right now. But I was looking at this and I thought, wow, what a turnaround. What a visionary this guy was at Greg Brown, to take this company over that was certainly going to die and turn it into what it is right now.
Yeah, I mean, it's a great American story, but here's the thing: I got a question for him. Is he going to take that money that the cash cow's producing and find another thing to grow the company, or is he just going to sit back, relax on that cash cow? Because then I'm not investing. I'm not investing if he's not innovating.
Well, so that they've already done that. They kind of went on a little bit of a acquisition spree for a little bit, but I think he only spent like $8 or $9 billion on it. So, but yeah, I mean, but if you look at it, look, it's got a price to earnings ratio of 30 right now, and the growth opportunities look pretty good. And their customers are government, so it's a sticky market for them.
Yeah, I mean, but that's to maintain. I want to see growth. So, yeah, again, my question is, what are you doing for growth? Are you just maintaining what you already currently have? And so,
well, I tell you what, I was looking at the numbers. I don't have those in front of me because I had this very brief. Next episode, I know we're not supposed to talk about this kind of stuff, but I will bring more numbers on Motorola's comeback, and we will talk a little bit more about their growth because just looking at the balance sheet looks pretty good. So,
Gotcha. Gotcha.
um,
All right, man. Nice.
wait. Couple more things here. I want to give some notes on General Electric's turnaround too, and a salute to Larry Culp. Here's just a few more statistics. Just three. I got three. Okay. 3 out of 4 commercial flights are powered by a GE jet engine. Every 2 seconds, a GE powered aircraft takes off. That's pretty crazy. 650,000 people flying at any given time on a General Electric powered aircraft. Okay, that's what I got.
And you know, I've given them all the credit in the world for the aviation side of the business. It's a great business and it's continually grown. It truly is. It truly is. So, all right, let's get in here. So, I mentioned some.
Dave, hold on, real quick. It truly has been a Shawshank Redemption.
Oh my goodness. All right, so let's talk about this. I know I teased you, Brandon, about something to do with airlines, right, and suppliers. So here it is. Headline reads, major U.S. airlines finds unapproved jet engine parts in some aircraft as alleged supplier faces lawsuit. This is affecting Delta, United, Southwest, and American are just a few of the airlines that are having this. What do we mean by unapproved parts? It includes a compressor, stator, vane seals, low pressure turbine blades. Basically, here's what is happening. The alleged supplier of these parts is AOG Techniques. It's a firm that acquires parts before selling them to maintenance and repair organizations. Right. So what's happened is Delta, for example, they got informed that these engine service providers, that number of engines they overhauled for us contain certain parts that do not meet documentation requirements. Well, how did that happen? Well, they faked the documentation requirements. They're in the process of replacing these parts for FAA guidelines. And you may be asked, for Delta, it only affected less than 1% of their whole fleet. So there's not a whole lot of planes out there to have this, but it makes you wary of travel. So then you ask yourself, well, what air what do you call them? Airplane. I forget the name of an airplane. Airplane manufacturer is this affecting? And guess who? It's our old friend Boeing.
You know what? At this point, I would think that WeWork would be a better manufacturer.
I mean, it is laughable. It is funny, but it is sad. Yeah. Because here we got another parts supplier for Boeing, another chink in their supply chain that is just messing up everything, and they can't get it right. They still can't get it right. And it's amazing to me. And if we weren't in a duopoly, Boeing would be out of business by now.
Yeah, definitely.
They would be out of business. It's so poorly ran. So poorly ran. It drives me crazy that we still have these things happening. And I'm so glad that it's less than 1% of the fleet, so that can make me feel safe flying. But still, there was airplanes out there with parts that weren't up to code or standard just flying around in the air. It's crazy.
That is crazy. And Boeing's just once great American company, and it's bad, terrible how far they've fallen.
I knew you would enjoy that about Boeing, and they can't get their parts together. All right, so a couple things here. We're gonna first talk about Novo Nordisk. If you don't know who Novo Nordisk is, and I don't know anybody by now who's an investor, a trader, or it watches investing or follows CNBC or any Bloomberg or anything, and they don't know who Novo Nordisk is. But if you don't know, they're the makers of Ozempic, right? There's is it Wegovy's another one, but Ozempic's the main one. But Ozempic is a current drug that was a diabetes drug that's used for weight loss as well, and it actually works. People who take Ozempic actually do lose weight, and they do not crave salty, bad foods and or alcohol, right? So it actually works. It does the job it says it's going to do. There have been rare occurrences. People say, well, there's got to be side effects. There's been rare occurrences where you've gotten a blockage in your intestines or your stomach hasn't processed it. I don't know the exact numbers, but they did use the term rare and minimal. I don't know what that means. I would love to know the exact percentages of people that had this happen to them, but nonetheless, this drug has taken off. It is making Novo Nordisk a ton of money. Why am I bringing that up? Right? Am I saying buy Novo Nordisk now? I'm sure. I mean, they're making a ton of money. Why not? Right? Here's why I bring this up. If you don't know, Novo Nordisk headquarters and the company sits in Denmark, right? So what does this mean when you have a company that just blows up, right? Wegovy with Novo Nordisk selling Wegovy right and left, right and left, right and left, and that's what they're doing, and they're bringing in tons and tons and tons and tons of money. Well, here's what that means. I'm trying to find the numbers. I'm trying to stall while I get these numbers together, and I just can't seem to find the right numbers here. So my stalling is just sounding awful right here. All right, here it is. So Denmark's statistics agency released startling GDP figures that found the economy would have contracted by 0.3%, but instead they grew by 1.7% simply just because of Novo Nordisk.
Wow.
That company alone grew Denmark's economy by basically 2% because they were going to contract by 0.3. So, you take the difference, 2%. The concern for Denmark is that they have another Nokia in Finland issue. When Nokia went down, it took down the whole country of Finland with it because so much of Finland economy was based off of Nokia. Same thing with Novo Nordisk and Denmark. Novo Nordisk is a higher GDP than the rest of the country. It brings in more money than the rest of the country together. And that's something that Denmark is very aware of. So what Denmark is doing is Denmark is actually raising their rates, their interest rates separate and apart because of that. So they're worried about their currency valuations. They're worried about their economy. They don't want to be just solely dependent upon this. Unfortunately, they are, which is a good thing right now because it's providing all the surplus that they didn't have before. But they have concerns like, what if you go down? Are you going to take our country with you? And that's the concerns of Denmark. So how would you play this? I don't know. Are you trading Denmark bonds, Dane bonds? I'm not, but if you were, that would be something to look at as an opportunity here of trading bonds for the Krone and Denmark and the Danes. Brandon, your thoughts real quick before I go any more into it.
Denmark doesn't want to become finished.
Nice pun.
Yeah, I knew you'd like that one. Crickets across the podcasting universe right now, but at least we're laughing. All right.
Right.
So here's my thoughts. I'm just 30 years of weight loss, crazes, and it's made me very skeptical. I guess we'll find out because these drugs, they hit the market and then, all they work and that's great and everything, but you don't find out for, 4 or 5 years what the actual long-term side effects are.
But you do, because people have been taking these drugs for longer than that for diabetes and other issues. They've been on the market for 10 years plus. And there have not been any actual weight loss drugs approved by the FDA for weight loss like this. Ally was the only other one that came out, and it's still on shelves and it's still selling, and it does work, but it doesn't work as good as Wegovy and Ozempic.
Yeah, and when you said that about the diabetes, that kind of perked my ears up a little bit. The fact that people have already been taking it, and so it's past the drug trials. Obviously, it's already been in the stage where the consumers have been taking it, and it doesn't seem like there's been that many issues over it. So it's a great thing. I'm glad the fact that it's grown Denmark's economy. I wonder what kind of headwinds they face with a skeptical American public, though.
But the American public's not skeptical. American public's buying this up right and left in order to look thin. This is, and in fact, this was the reason why. So we have Brandon and I are part of many different group chats for stocks and investing. So in one that is very personal friends, it got brought up that Walmart was going down because people were selling it because of the Wegovy and Ozempic. The headlines were at least saying this. I don't know if it's true or not. That's why. but the headlines were saying that, Walmart was selling off because people were going to start eating less junk food and buying alcohol. And so therefore, let's sell Walmart. And I thought that was an overreaction to a headline. But I mean, it actually is working, Brandon. You can't deny the fact that this works. It's FDA approved. So far, the only bad things we've seen, like I said, have been the blockages in the intestines, which can be removed safely, but they have happened and it's been rare, minimal. So I mean, think about when Botox first got realized that, hey, we don't have to just use this for migraines. It can actually have a cosmetic advantage as well. Didn't Botox take off, and is Botox still not in use today?
Yeah.
So Botox is still around. So, I mean, you would think that Ozempic and Wegovy is also going to still be around for weight loss. And, we're going to see a whole group of people buying into this and using this for weight loss. Now, my thing is, right now, there's only certain groups of people that can afford it, because for weight loss, I do not believe is insurance covered. So you're still going to see a difference in who can afford it, who can't, because you got to pay the full price for the drug. And you have to continue using it, because if you quit using it, then your appetites do come back to normal for some reason. I don't understand why, but they do.
Okay. So you have to wait until you become diabetic
In order to get it paid for by insurance.
You have to wait.
You could get it paid for. You could pay for it out of pocket, which a lot of people are by the millions. Because if you go around the street, Brandon, and you ask people who are overweight, if you pay, I don't know what the price is for these drugs, but let's say you give me $1,000 a month and I can make you thin. Most of them are going to say, I will work a second job and become thin. And a lot of people feel that way. And so you have millions of Americans who feel that way and are willing to fork up that kind of money to be thin.
I guess. Yeah, that's true. Pepsi took a hit too, because people sold off Pepsi for the same reason.
And that's crazy, because it's too early to be selling off these companies, because number one, these people have to continue taking it, because everybody that's gone off of it has gained weight right back. And I don't understand that fact, because you would think your stomach shrinks and your appetite, you would no longer really, after so long, you would crave what you have been eating and not the junk food that you were eating. But for some reason, their appetite comes right back. And a lot of people have gained weight right back after stopping using it. So
but that could be bullish for the company, actually.
That's very bullish for the company. Yeah.
You're on it for the rest of your life.
Basically, yes. You take this, you will be thin, but you have to take it every month for the rest of your life. But anyways, the Danish economy is relying upon it. They're worried about it. And it brings up such a big part of the Danish economy. It's crazy. In here, it goes in to say that, right, the drug maker is now Europe's largest company by market cap. Europe's largest company by market cap. Once again, Europe's largest company by market cap now is a weight loss drug company. It's grown so big that its annual staff party last month was a 4-stage music festival attended by 10,000 people. Wow. That was this is insane how much money this company is bringing in, and how much it's really just put in Denmark on the map here as far as like a growth money. I don't know what Denmark's going to do with all these funds coming in. I know they are a very socialistic country. Is that not correct, Brandon? Am I right at that characterization?
Half and half. I mean,
half and half. Okay.
There's certain areas of their business that are actually more deregulated and less taxed than us. But yeah.
Okay, so I mean, they're going to put that money to use, hopefully, in that regard. So there you go. Something to take home about. Would you buy it? I probably would buy it right now, because, like I said, people have to continue taking it. It's just, I mean, come on, Brandon, would you buy it?
I'm skeptical.
You're too skeptical. Too skeptical.
What the red flag here is for me, though, is the 4-day music festival. That's a red flag for me. I wonder how much money.
You're thinking of WeWork. You're thinking of WeWork when you hear that.
I mean, other companies do this. They put on airs for everybody to make themselves look a lot better than what they actually are. And you said that people have already been taking this drug, so it's got a base. So I guess I might be wrong about it, but I don't know. I'm just so turned off by the weight loss industry. Over the past 30 years, it's just been nothing but hype and then crash and hype and crash and hype and crash.
So I mean, there has been some hype and some crashes because they were not FDA regulated drugs,
Yeah,
right? They're just
right.
over the counter things, or a system like P90X works. Well, I mean, it does work if you stick with it, and you have to stick with it and do it and have a healthy diet with that. People can't maintain those things. That's the
Yeah.
problem.
So I mean, I guess the thing is like if it can get you thin and healthy, and that's kind of the important point. Like it's not really just about losing weight; it's about being healthy and living a better life with less problems when you become older and all of that good stuff.
It
I
does.
don't know. Here's
It
my
makes
thing
you
though about
not
this.
create.
By
It
the
makes you.
time,
Go ahead.
by the time all the good evidence comes out about this company, if all this stuff that is being said about it is true, by the time it proves itself to me, it's probably all going to be priced in, and the train's going to be left and completely out of the station. So,
Exactly, and that's why I'm telling you, you're missing out on this one. But hey, each your own. All right, let's move.
what happens? I wonder how long is it going to take for the generics to hit the market, and what kind of effect that's going to have on them.
Oh, that would have a huge effect if and when they hit the market, man. If and when. We'll have to wait and see. We'll have to wait and see. I want to move on to this last article here real quick and spend 5 minutes on this. Unfortunate, and I want to talk about the unfortunate geopolitical events that happened over the weekend. Israel got attacked by Hamas. And I want to talk about it from a financial aspect. And I'm going to, there's a news article written by Stephen Shear on Reuters that came out this morning at 8:40 a.m. And in it, it talks about what happened last time Israel went to war and what happened to their GDP and their market and their bonds and everything. So the headline reads, Israel markets sink, businesses shut after Hamas attack. So basically, key Tel Aviv share indices ended nearly 7% lower, led by a 9% drop in banking shares on turnover of 2.2 billion shekels or $573 million. On government bond prices, they fell as much as 3% in the market's initial response to the attacks. The foreign exchange was closed on Sundays, but the shekel's already at a weak level of the year due to the problems in the government, and they've had a contesting of elections and everything else. So the shekel's already been weak this year. This is not helping that at all. This is going to have a huge negative impact on the economy and the fiscal budget here. And it goes in the article saying the Bank of Israel is probably going to sell some FX, sell some shekels, and the Bank of Israel said it was too soon to assess the economic damage from the conflict, but pointed to a 50-day war with Hamas militants in Gaza in 2014. That caused a damage of 3.5 billion shekels, or 0.3% gross domestic product, GDP. The central bank has been projecting 3% growth in 2023 and 2024. Probably not going to see that now. So last time something like this happened, they lost 0.3% of GDP. And they saw all their bonds go down. And this Israel is going to be selling some of their foreign bonds that they hold right now. So given that information, do you use this as an opportunity thinking, all right, Israel's going to get out of this. Let me go in there and buy something cheap.
I think that it would be very detrimental for Hamas to go into a full blown complete war that lasts for a long time. I think it would be very detrimental to Hamas. I think it would be catastrophic to the Gaza Strip, catastrophic to Israel as well. But I think Israel comes out ahead. Checkpoint Software Technologies is actually based in Tel Aviv, so it'll be interesting to see what happens to them Monday's market open.
But my question was, are you going to buy something based in Israel, thinking under the assumption that Israel is going to come out of this, and whether it's 10 days, 20 days, 30 days, and you buy it on the cheap right now?
It's possible. I would have. I've got actually right now Checkpoint Software on my watch list to see what happens. Because if it comes down to a good value, then I'm betting on Israel to win this. for sure.
See, and that's what I want to talk about. I mean, it's an unfortunate event. You never want to see these things happen. You never want to see war in any country whatsoever. But we're a stock and investing show. That's what we talk about. Investments, stocks. How do we make money in every situation that's out there? This is a sad situation. Is there a way to invest based upon it? And I think there is.
Yeah, it's possible. 1,000 people dead now from both sides from yesterday.
That's not good. Yeah.
It's a terrible situation. I am concerned about, if the United States decides to get involved here, what that does to our debt when we're already involved in Ukraine and spending so much money over there. Now we've got a situation with Israel that we might be spending money on. I mean, maybe Lockheed Martin and General Electric are beneficiaries of this over the short term.
Maybe, but I mean that means we're going to be selling more U.S. bonds.
Yeah, we are.
To cover this.
That's another problem. Exactly.
So it goes back to earlier in our discussion on the show about we're going to be selling more U.S. bonds to raise money. So keeps the rates high and more of a chance of a hard landing now.
I've read recently that the Japanese yen tends to do really well when the U.S. goes into a recession, and I haven't quite wrapped my mind around why that would be the possibility, why that would be the case. But it's definitely something to look into and maybe for us to talk about on the next show when geopolitical tensions rise and it looks like we might be going into a recession. For some people, for some reason, some people pile into the yen as a safe haven. Excuse me.
Yeah, that is unusual. We will have to look at that because I do want to discuss these events in a manner of finance and investment and how it affects the markets to explain it to people. We're not news analysts here, you and I, Brandon, but we are finance guys. This is what we talk about. So this is how it affects the financial markets.
Yep.
Cool. Any final?
Back around here, just asking you this question because we haven't really talked about it. What do you think the vacancy of the House of Representatives speakership? What do you think that has? Do you think that's got any effects coming up on the market or?
No, none. Not even concerned about it from a financial aspect.
I don't think I am either. I wasn't at all. And then once they actually announced that it was vacant, I was like, wow, this never happened in the history of the United States. So it is pretty crazy. And when you tie it together with, the fact that the reason that they did it was because the government bill was passed to keep the government open for however long it's going to stay open, probably forever, because it's always a dog and pony show. But now it really does seem like there might be, a threat to the next bill to keep the government open. Who knows? We do need to rein in spending though. So.
From a financial aspect, I don't think it's going to have any effect right now on any of the markets. So, and like you said, they always end up passing something, and it is just a show they put on to
creates buying opportunities.
Yep, exactly. There you go. Final thoughts, Brandon. What do you got?
That's everything. I've actually said everything that is on my mind. I will say this actually though. Okay, so if you're in my camp, the hard recession camp, trying to time a recession with puts would be, I think, a mistake. You could get lucky with it, but look, hey, your bet that we're going into a recession could be right, but it doesn't matter if it's early. Early is still wrong in the options world. So I would just be, stacking cash and getting ready for it because buying opportunities, if we do go into a recession, they're going to come and they're going to come fast.
Right. And where do people put money? That goes in my final thought. And I mentioned earlier about using crypto as a way to, give loans out, home loans out, give out this loan, business loans out as a way to get around the U.S. financial system. Per se, that there's got to be a legal way to make it happen. If anyone's smarter than me, please, we can combine forces. We can make this happen. But, I look at that, and when the first time that Bitcoin exploded upon the world was when the country of Cyprus began to fail and the banks began to fail, and people just started buying Bitcoin to put their money in something else than a bank. And it took a catastrophic catalyst like that to make it happen. I believe if another catalyst similar to that happens where people don't trust in the governments and the banks, Bitcoin will jump right up. And that's what a lot of people are betting on when it comes to Bitcoin. So crypto's always on my watch list, always something I keep an eye on, and I keep a close eye on there. As far as like any calls or buys or anything like that this week, I'm still slowly buying into Tesla. I don't on any investments. I don't go all in all at once. I do that on day trades. I don't do it on investments. On investments, I try to go in. I have say I have $1,000 I want to put into a company. I'll go in with $100 right away, and then another $100, and then another $100, and I slowly buy in. That's typically what I do with investments. But so I'm still buying in Tesla. I believe this is an investment for myself. This is not a day trade or swing trade. This is an investment this time. So I seem to be doing pretty well right now in it. But that's all I got, man.
That's
All
the way
right,
to do it, dude. I averaged down to $150 on Meta.
yeah. See, all right.
And I was calling to buy it when it was like 270. I was way away.
You were kind of way over. But you dollar cost average, and a lot of people don't want a DCA, but DCA is a very smart play if you believe in the company long term. Mm-hmm. All right, guys. We hope we've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.